Hi guys, for today's trade of the day, we will be looking at Aussie dollar. And as usual, we start off with the monthly chart. Now, the monthly chart, the Aussie dollar actually made a historical high in 2011 August, and has been in a downtrend ever since, with most recently it actually spiked all the way to even lower than the price of Aussie dollar back during the global financial crisis in 2008. But as we look at the charts, what we want to do now on the monthly is to look out for long-term support, long-term resistance areas. Okay. And currently, because price has already made such a new low, there isn't really a place that we can find long-term support. But let's just take the historical price back in 2003. Right, and it's come close to this area, so let's call this our long-term support. The long-term support level, and let's see whether there are any Fibonacci levels that coincides with this area to further strengthen this level at 0.5402 as our support. So I take a extension from the top to the swing low here and back to the top here, and just open up all the Fibonacci ratios. And you see that actually price reacted right at the 61.8 Fibonacci extension. So let me just highlight that level. So it's very nice. Price actually tapped the long-term extension 61.8, and then it pulled back. Okay, so what we expect to see in terms of the long-term chart for Aussie dollar is I'm not too sure about it yet, but in terms of Elliott wave, if let's say this is a huge wave A, B, C, and then you should see a 1, 2, 3, 4, 5. This could be a 1, 2, wave 3, wave 4, and we have reached wave 5. Elliott wave theory states that wave 5 is the 61.8 extension of the entire wave 1 to 3, right? So the Elliott wave could be done already, and what we expect to see is a huge A, B, C from here on. But let's go down to but this on a super long term time frame. But for now, Elliott wave theory is just a projection. You cannot just use any indicator on its own. So what we're going to do now is find the long term resistance level, and just by eyeballing, I can see that there's a small little zone here, this area. So let me just put that in, right, and call it the long-term resistance. Okay. And same thing that we do, we want to find a Fibonacci level that falls in line with our long-term resistance at 0.6690. So what I want to do is I want to take a retracement from the historical high all the way down to the low, and we see that the long-term resistance falls close to the 23.6 level. Okay, so I'll just highlight the 23.6 level. Again, in Elliott wave theory, to confirm that we are going to make a huge ABC wave up, what has to happen first is the 23% has to be broken. This level has to be broken. Only when price closes above this level, then can we be sure that price is going to make a push upwards. Okay, but now that we have our long-term resistance and our long-term support level, let's go down to the weekly. Let me tidy this up for you. Okay, so this, let me just highlight it because it's a zone for me. Okay, great. Now that we have the long-term resistance and long-term support level, right, what we want to do is we want to repeat the same process. On the weekly, we want to find the weekly resistance and weekly support level. Okay, currently, we don't really see any further support below the long-term support because price is just making a huge push down. But let's focus on this small impulsive wave here. Okay, I'll take a retracement from the spike here all the way to where price currently is, and then I'll pull all the ratios, and we see that there's this 61.8 where it held here nicely, rejected, formed a green candle before it got broken again. So let me just highlight that level, 61.8, and of course the next support below the long-term the next support level below the long-term support level we can just put at the negative 27.20. But since that's quite far from current price, we'll just ignore it and just look out for the 61.8. So at the 61.8, let's just put that resistance level in. And we call this the weekly resistance. Okay, it's interesting to note also that price is still in a downtrend. So the long-term picture, we are bearish, but let's just go to the next lower time frame, the daily. Same thing, let me tidy this up. Okay, so these are long-term resistance, long-term support, and weekly resistance. And currently we see that price has formed a sort of a doji here, right here, right? Let me just bring out the text. So we have sort of a doji here, right? And a doji that happens right at the bottom of the trend, trying to signify a reversal. Up. Okay. So what I'm guessing here now is that price would actually from here make a push up towards the resistance and possibly even the long-term resistance zone here before there's any chance of a deeper drop. And if price breaks above this long-term 23 level, which I pointed out, then we can be sure that a recovery is on the way. But if not, we'll just stay to our bearish bias. Okay. So what we're going to do now is find any other shorter term resistance and support level. Okay, so for support, because there isn't any really clear level for support, we just want to take this small movement here and we do a retracement, at least 2 bars. And we see that 61.8 rejected nicely at this level as well, right? So I'll just leave the 61.8 here. And we have, of course, we have our Fibonacci retracement targets, negative 27.2 and negative 61.8 over here. But for now, I'll just focus on the 61.8. So this can be our daily support. Okay. And let's try to find the next target before the weekly resistance. Previously, I took this big movement on the weekly from the swing high to the swing low, but I see that market actually made a pause here and reacted off before it started a new movement down. So let me take a retracement from this level here to this low. And same thing, I'll pull out all the Fibonacci ratios. You see that 78.6 actually falls in line with the weekly resistance, but before that, price actually is testing 38.2. So we can keep the 78.6, and if we really want to, we can still leave the golden ratio 61.8 here. So let's do just that. Okay, now that we have this level, we can put a daily resistance over here. Now that we have all this level, let's go down to the 4 hours to look for our trade. I will remove the long-term resistance because it's too far away, but keep in mind that there's a long-term 23.6% here that needs to be broken to confirm that the market is doing well and we're in a bullish environment again. Okay, so what I want to see now is for price to actually come back to this level here. Sorry, price to actually come back to this level here, and then bounce up towards this level. Or price could actually just go straight from here towards our daily resistance and possibly even towards our weekly resistance. Alright, so this level, this anywhere in this zone can be my entry. Alright, let me change the color to show that this will be the entry level. Okay, so anywhere in this level, in this zone here, right, anywhere here will be our entry, and then we'll play with our first target here at daily resistance, and once this is hit, we can actually close out half our position and move our stop loss to break even, and can leave the rest of the position to run towards the weekly target. For stop loss, I'll put it anywhere in this zone here, which is above our long-term support. And what it does is it actually gives us a very nice risk to reward ratio. About the risk to reward. Okay, a very nice risk to reward of 2.12. Right, so this will be our trade of the day. Thank you.